to moderate the entire event. Thank you very much.
Great. Thank you very much, and good afternoon, everyone, and welcome to the Nigerian Stock Exchange Fintech Webinar. My name is Mohammed Garba of Cardinal Stone, an investor in tech and e-commerce businesses in Nigeria, as well as a capital market operator. The theme of this webinar is accelerating growth in the fintech ecosystem through the Nigerian capital market. Time frame, we're looking at roughly 1 hour, 30 minutes for this event from start to finish. I'd like to thank the organizers, the Nigerian Stock Exchange, for putting this together. It's because it's very integral in driving long-term capital, stable capital, in not just real sector businesses, but also in fintech. So this is a very laudable initiative. And the aim of this event is to, as much as possible, explain and encourage investors and entrepreneurs on using the Nigerian Stock Exchange platform. I would also quickly like to call on the Divisional Head Listing and Business, Mr. Olumide Bolumole, to give us the opening remarks.
Thank you very much, Mohammed. Good afternoon, distinguished ladies and gentlemen. On behalf of the National Council and management of the Nigerian Stock Exchange, it gives me great pleasure to welcome you all to this webinar themed Accelerating Growth in the FinTech Ecosystem through the Nigerian Capital Market. I thank the erstwhile President, Dr. Segun Aina, OFR, and current President, Mr. Ade Bajomo, as well as the executive management of the FinTech Association of Nigeria for collaborating with us to host this webinar. The exchange views it important to provide a platform where growth companies have access to capital, and this webinar is part of our strategic efforts to address the needs of the FinTech community and ensure that the sector is positioned for growth. I thank our distinguished speakers and guests for making out time to participate in this webinar, and we look forward to having fruitful deliberations. Recent times have witnessed the disruption of the global financial sector through technology, innovation, and increased digitization, birthing the financial technology or fintech industry. In the United States alone, investments in the industry has seen more than a 100-fold increase from $1.8 billion in 2010 to $19 billion in 2015. Recently, the size of the global fintech industry has been valued at over $127 billion and is expected to grow at an annual average of 24%, amounting to $309 billion by 2022. According to the Economist Intelligence Unit report titled State of Play, FinTech in Nigeria, the number of fintech companies in Africa grew at a yearly rate of 24% between 2009 and 2019, fueled mostly by Nigeria, Kenya, and South Africa. Based on the report, it is projected that fintech revenues in Nigeria will grow from $153 million in 2017 to $543 million by 2022, driven by expanding payment services, the e-commerce market, and rising smartphone penetration. The expected growth has received attention from both domestic and international investors, which led to significant investments as existing operators position for future growth and development. At a time when technology is disrupting the global financial services industry, Nigeria has taken the lead in Africa by attracting $122 million in fintech investments in 2019. This represents just under a quarter of the total investments received by the 311 African technology startups, as indicated by the 2019 Africa Tech Startups Funding Report. The number of investors in African tech startups also jumped by 61% to 261. In the last 5 years, Nigeria's fintech companies have raised over $600 million in funding. This year alone, Nigerian startups raised $55.37 million and $28.35 million in the first and second quarters, respectively. According to the McKinsey Global Banking Pool, fintech accounted for only around 1.25% of retail banking revenue in 2019. Also, the sector mainly receives funding from foreign investors, and though fintech investment grew to $460 million in 2019, it is just a small portion of the $36 billion invested globally. This shows that despite the growing investor attraction and significant inherent opportunities that is in the industry, the sector's full potential is not being harnessed. In a post-COVID-19 world, industry experts expect digital-only solutions to become the new norm, most especially in financial services. Alongside, mainstream financial institutions are expected to accelerate digital transformation through partnerships with tech companies over existing in-house solutions. Like other sectors, fintech also has its challenges, from lack of appropriate regulation, limited access to credit, unstructured and unavailable data, corporate governance limitations, all present as hurdles to be addressed. At the NSC, we see the need to bring together industry experts and regulators to identify these challenges and jointly collaborate to provide solutions to address the need of the fintech community in Nigeria. Earlier this year, the exchange introduced a new listing board, the Growth Board, that caters to the entire life cycle of most startups, small and medium enterprises with high growth potential, including fintech companies. The board offers low entry criteria, less stringent pre and post listing requirements, which provides greater opportunity to access capital for growth. The Growth Board is one of many initiatives the exchange has developed to provide value in the growth space. We are currently in the process of developing other solutions to support capital formation of privately owned entities, whilst also providing support and visibility for startups. Distinguished ladies and gentlemen, I'm confident that the entitled deliberations at this webinar will provide clarity on the areas of uncertainties, explore existing opportunities, and focus on leveraging the capital market as a tool to accelerating growth in the Nigerian fintech ecosystem. I encourage you all to participate fully in the discussions, as this would catalyze practical solutions needed to spur innovation and growth in the Nigerian fintech ecosystem. The NSC remains a business enabler, providing a platform to support companies in meeting their strategic and business objectives through capital formation, liquidity, innovation, advocacy, and capacity building. Once again, I welcome you all to this interactive session. Thank you.
Thank you very much, Olumide, for this very interesting opening remarks. Moving on, I would like to introduce the President, Africa Fintech Network, and Chairman, Board of Trustees, Fintech Association of Nigeria, Dr. Segun Aina, to give us his welcome address.
Okay, good day, everyone, and thank you, Mohammed, for the introduction. And I want to express my appreciation to the Nigeria Stock Exchange for inviting me to give this opening short keynote within a few minutes. I also commend also in particular the NSC DGCO, Oscar Onyema, and the leadership for the profound interest they have in innovation, the technology, and the growth of the capital market generally. And of course, the team that put this together have done very well. Olumide, Benga, and I can see Tony also. This is a continuation of the great work they have been doing in this space in the last 2 years or so, that we got to engage with NSC, that is the Fintech Association of Nigeria, of which I was the president until 2 weeks ago, when Adebayomo, who interestingly used to be the executive director of operation and technology in the stock exchange, and also facilitated the relationship at those early days between the Fintech Association of Nigeria and Nigeria Stock Exchange. The theme for this webinar, Accelerating Growth in the Fintech Ecosystem through the Nigerian Capital Market, is very appropriate at a time like this, which I consider that we are seeing the second wave or new turning points in the fintech ecosystem in Nigeria. Even though financial technology has always been with us for years, I mean, we've had the likes of industries, the likes of Remita, but in the last 5 years, say 2015, for instance, after the fallout of the financial crisis of 2009, we have seen significant prominence of fintech, and that was when fintech actually came into the vocabulary. And in the last 5 years has been quite interesting, quite exciting, seeing great things coming up from innovators the fintech system, particularly in the payment, particularly in the payment area. We are seeing great investments. Nigeria producing the first unicorn tech company for InterSwitch with Visa investing $200 million recently. We've seen the acquisitions, Stripe, buying over Paystack. Paystack is under 5 years old. We've seen new investments even in this COVID period. Babs is here. Kuda Bank was last week. It was announced that there's a $10 million investment in the Kuda Digital Bank. So a lot is happening, and like Olumide said, Nigeria is leading Africa in this. I mean, probably about 25% or so of investments coming into the fintech space in Africa comes to Nigeria. So we are expecting that in the next 5 years or so, we see a lot of new unicorns, big companies, fintech companies becoming unicorns in the next 5 years. And that's where, activities like this and effort like this by the stock exchange will help to accelerate that process so that we can help to grow the Nigerian economy. NSC as a self-regulatory organization has shown significant interest. I am aware that about 2 years ago, I led a team of about 22 startups to the stock exchange to talk about the draft growth board at the time, which actually helped the stock exchange in understanding the need of that market. And I'm happy that early this year, that growth board was launched. And of course, it had to continue to be fine-tuned. The outcome of events like this will also help NSC in further implementation and fine-tuning the process. And NSC has shown interest also by being a prominent member of the Fintech Association of Nigeria, through which they're able to also understand the workings in that sector. And the stock exchange also, which is also the regulator in the capital markets, has done a lot with the association, has done a lot also in the area of ensuring that they come up with regulation. We have now seen some crowdfunding guideline that is ongoing now. We've seen things in the blockchain area. So the regulator is also very, very responsive in terms of providing adequate regulation. For me, I see 3 clear ways for the capital markets through the stock exchange that can accelerate growth in the fintech ecosystem. And these are also things that are derived from the challenges that we've seen or hear fintech companies say. One is the deployment and partnership with fintech companies for operational efficiency, digital transformation, digital solution, new products, and so on. In the capital market, through the use of technology, you can accelerate this by encouraging the operators, supporting the partnerships, and so on and so forth. Second is by supporting and advancing friendly, relevant, and clear regulations to encourage and accelerate growth. And I see NSC working with the SEC in this respect, so that by the time the regulation is clear, unambiguous, and supportive, we will see a lot of traction in that sector. And the third point is, of course, the area that you have your core competence, which is appropriate funding platform. Not only, at the early stage and scaling to domesticate ownership in the short and long run. We've seen a lot of money coming into Nigeria these days, but most of them are coming from abroad, just like Olumide have said. And that means the ownership of those companies rest abroad. The benefits goes abroad, where the market is here, the money is made here, but the returns goes to other countries. So a stock exchange needs to drive this process where we can domesticate funding, domesticate ownership, so that it can also grow the system here. We've done a lot of, most of the surveys that we have done with fintech companies, asking them what are the key challenges and so on. So there are a lot of challenges, but the one that's really come up strong with the two that come out, number one is regulatory clarity and appropriate funding. If you ask a similar fintech company 10 years ago in the UK or in Singapore, they probably tell you the same thing. But in this day and age, in the UK and in Singapore, for instance, maybe again because of the efforts of the Financial Conduct Authority in the UK and Monetary Authority of Singapore that have actually done a lot in ensuring very close affiliation with the fintech companies. The regulation is not a major issue in those markets, but in Nigeria, it's still the number one challenge that fintechs have. So it is very, very important that NSC lead this effort or support this effort, working with SEC and other regulators like the Central Bank, the National Insurance Commission, and so on to put this in place. And for Fintech Association of Nigeria, for instance, we put together a regulators forum. Regulators means the regulators and innovators. The forum about 32 people to work together to understand each other. The innovators should understand the mindset of the regulator. The regulator has a mandate. So they must understand the mandate of the regulator. The regulator must also understand the mindset of the innovator in terms of they want to quickly make things happen. They want to, solve challenges that they have seen and so on and so forth. We believe that with this regular interaction between regulators and innovators, we'll be able to deepen the understanding and then be able to help to accelerate that process. And of course, also in the funding area, the Fintech Association of Nigeria also working with the operators and the markets and the members. I've also set up the Fintech Fund team. And I think the stock exchange is also part of that, how to be able to put together a robust, large fund that will be available for Fintech, particularly at the startup stage, which is the most critical stage. And of course, we can also build a series of funds that can even come in and finance. I would be happy to hear that, the $10 million that come into the digital bank recently has been raised from Nigeria, so that we know that those returns, will rest with Nigeria. Yes, we know that investment in fintech, you need patient capital. And I believe that with the experience that we have seen, the returns on those investments are significant. And we should be able to, through the NSC, make these happen. So NSC should lead this effort to embrace this funding that is localized and work with the various angel groups. There are a lot of angel groups operating in Nigeria that we can harness and ensure that we have a program that recognizes their contribution and participation, and make sure that we build on that to be able to improve the funding that is available for fintechs to be able to operate and thrive, and thus accelerate the ecosystem. I have no doubt that the panelists that have been lined up to discuss this subject will do great justice. They are the best you can get in this fintech ecosystem in Nigeria. Nigeria is really, truly blessed. And that's why we have seen a lot of things happening where Nigeria is leading Africa in most of these things. So I want to thank Mohamed Garuba, the Cardinal Stone, for the special interest that you and your company is showing. And of course, the speakers, all of whom are people that I know very, very well and I respect a lot, like Abuiji, Fisher Africa, John Flutterway, Fandela, Bitel, Duneye, Yugu Market, Odwa Weni, Babs Ogundeyi, and of course, Goldstone. These are guys that have been working tirelessly to ensure the growth of fintech in Nigeria and contributing significantly to the Nigerian economy. So once again, I want to thank you for inviting me to make these few remarks, and I look forward to a very interesting session today. Thank you very much.
Beautiful. Thank you very much, Dr. Aina, for this very passionate opening address. I believe this has set the tone for a very wonderful day for us today. Without wasting much time, I want to call on the admin to launch our first of 3 polls we'll be having today. And I'll crave the indulgence of attendees, yes, to answer this poll. This is the first poll. The question there is, what's your major business challenge? We'll give 1 minute to just quickly answer this. I hope people are able to access this. Admin, ensure it's okay. Beautiful. So 30 more seconds. Okay. Okay, admin, I think we can, yeah, we can close the poll now. Okay, very interesting results. So the question again, what's your major business challenge? I think financing, clearly financing and funding challenges, quite obvious, was expected as the most, what came out with 53% as the most obvious business challenge, followed by unfavorable regulatory framework, and then cybersecurity, and last 14% lack of access to talent. Clearly, I mean, this is very obvious, and I think that's really the aim of this whole webinar. We're trying to solve this financing and funding challenge problem. And just like Dr. Aino has said, as we progress, we have a very rich array of speakers. They'll be delving on this, telling us how they started their businesses, some of the challenges they went through, and ultimately how the stock exchange is trying to ensure that this gap is bridged in partnership with the Fintech Association and the various funds coming up. I think the next thing on our program is one very important initiative the Nigerian Stock Exchange has put together, which is the NSE Growth Board. I'll be calling on Benga Kolawole of the Primary Markets Division of NSE to take this presentation. Benga.
Thank you very much, Mohammed. I will just use a few seconds to share my slides.
Sure.
Admin, if you permit me to share my slide. Okay, Mohammed, you can help confirm if you can view my slide at your end.
Yes, your slide is fine.
Very well, thank you. Good afternoon, viewers, and good afternoon, esteemed panelists. My name is Benga Kolawole. My job is easy. I know the viewers are eager to participate in the conversation, the panel section, so I'll quickly just deliver my presentation and allow the panel session continue. Today, I'll just be talking about the Growth Board value proposition. And if you recall, Growth Board was launched January this year. And I thank the chairman of the association who said the market is here and the market is Growth Board. And so what I'll be presenting today will cover the SME ecosystem. We'll look at different jurisdictions. We'll talk about our understanding of the funding of a startup. We'll now look at an overview of the Growth Board. We'll talk about the benefits, the eligibility criteria, and also talk about the value add services and the different listing segment, because it will not be fair to end the presentation without talking about the other segments of the NSE. So just quickly, the SME ecosystem, which is why we've launched the Growth Board. From statistics, and you'll see on my slide that we have about 41.5 million SMEs in Nigeria, cutting across the micro enterprise, small and medium. And these SMEs contribute about 48% to our GDP. And our pool is, I mean, it's very obvious from the pool we just concluded that the major challenge that the SME have is access to finance. And you agree with me that in lots of the startup, a lot of SMEs and fintech, sometimes use a mixed match of funding, using short-term fund to run a long-term business. And I think when we go down the slide, we'll see more of that. And these are the different alternative sources for funding for both fintech and SMEs. So we'll take a look at other jurisdictions, and comparative jurisdictions is London Stock Exchange, NASDAQ, and GSE. If you take a look at London and compare it with what we have in Nigeria, our SM market, you see the number of SMEs listed on London Stock Exchange. Look at NASDAQ and GSE, you see that The number of companies listed on the ASM board is just 9. And statistics shows that we have about over 41 million SMEs in the country. And the market cap of the total 9 is just about 6.97 as a Q3 2020. This tells us that they're not assessing the capital here, which is available. Like the chairman said, he said the market is here. We are constantly assessing funds offshore, and it's part of the discussions we'll have during the panel section. So this is our understanding of how a typical startup funding works. It comes from the idea, the vision of the founder. And I'd like to commend all the panelists. They are all co-founders and founders. And of course, they're going to share their thoughts during the panel section as well. I mean, a founder typically comes with his idea, build a concept, committed to it 100%, and is funding it 100%. As the business or venture continue to grow, there are co-founders that join in the business venture, and family and friends and other partners, and subsequently it attracts seeds of angel investors, venture capitalists, and so they also grow their capital from rolling out series of funds from A to E. But the ultimate goal, I mean, for every startup, every fintech, and we can see all around the world, is to maintain the growth of the company and also sustain it. And how do you do this? It's majorly by an IPO or listing on an exchange. And that's, you agree with me that that's the goal. Everybody, yes, we have experience where there are one or two sell off or buy out, but essentially most times you find out that it's even listed companies that do the buying. And so ultimately everybody wants to be listed, and the market is here. So we'll talk about the growth board. I did mention that the growth board was launched January this year, 2020, and this is part of our initiative after reviewing the SM board and typically engaging the FinTech Association and ecosystem to understand their needs and how their business operates. We realized that the SM might not capture the entire FinTech ecosystem, and we revamped. I mean, Dr. Aino has even attested to that, that there were a series of engagements. And so we revamped the growth board to accommodate even startup. And some of the objectives, of launching this board is to encourage companies with high growth potential, as we can see, to seize the opportunity of raising long-term capital. And it's very important to run your business with long-term capital and even debt, and not just an overdraft or the bank loan. To also cater for various segments. As we go along, you see the 2 segments in the growth board sector to show entry and standard. And also it gives you a high profile, it gives you visibility even as a startup, and eventually also help you with your corporate governance. Investors want to invest in good startup, in good companies, and essentially they like to do their due diligence to make sure that the company is run very well, and there's corporate governance and so on and so forth. We'll talk about that during our value-added services. What are the benefits of the growth board? I mean, you agree with me, a proper valuation is key for any company, any venture. Liquidity is also key. You talk about investors. Nobody wants to invest without an exit plan. They always want an exit plan, an exit opportunity. Listing on the growth board gives you the opportunity, especially for investors, to also exit when they are ready to exit. It also positions you, I mean, it gives you a flexible mechanism for raising capital. And I'll just I decided a bit to talk about the insurance sector. For the listed insurance companies, for example, NICOM has come with a recapitalization deadline. For those that are listed, they have the opportunity, they are positioned to quickly raise capital via rights or placement. It depends on the kind of investors they're looking at. And this, once as a listed fintech company, it gives you that position. You're already profiled. Foreign investors are seeing you, local investors are seeing you. You are well known, and your due diligence is out there, your reporting is out there, you're well structured. And these are some of the benefits. And even for the investors, it gives you opportunity to exit. It gives you opportunity to see a growth company with high returns that you can actually invest in, and also give you opportunity to join or invest in a startup that is well run. So we talk about eligibility criteria. It's very important we talk about the eligibility criteria, and I'll show the difference between where we are coming from and where we are going to and where we are right now. And there are two segments of entering the growth board. The first segment is the entry segment, and you have two routes to it, Route 1 and Route 2. But I'll leave the Route 1 because it's for existing listed company on the ASM board. For the Route 2, you can be a startup, and there are several startup fintech companies today that are struggling and looking for funding. I mean, you can be a startup, but it's very important that you have certain criteria before we list you into the entry segment. And the first thing that is very important is to have a co-investor, because you don't have a track record. You're just starting up, you're a new business, maybe you're like less than 1 year, less than 6 months, but you should have a co-investor or a strong technical partner that has a minimum of 2 years operating track record. I mean, running a business for 2 years and you're still sustaining it, it shows that there are certain disciplines you can apply to the new business. And so, or you have a majority stakeholder who is either a HNI or is a director of a listed company. Of course, you know, director of a listed companies have corporate governance in their blood, in their DNA. More so, your market cap as at when you're being listed is 50 million. So we've also reduced this to capture a lot of startup and growing business, depending on the stage you are in your life cycle. And your minimum free float should be 10%, meaning at the day you are listing, there should be 10% of your shares for trading, and this gives you liquidity. You shouldn't list and not have activity on your shares. And you have a designated advisor. I'll talk more on that and I'll elaborate more on that. Of course, as a PLC, you must have shareholders. But for ASM, it used to be 51 shareholders. But we realized that, I mean, for smaller businesses, getting 51 shareholders is a bit difficult. And so for the entry level, we reduced it to 25 shareholders. So you can actually enter into the entry segment and be listed. And also for the directors, they're expected to retain a minimum of 50% of their shares in the issue for a minimum period of 12 months. The second segment, which is the standard segment, there's also a Route 1 and Route 2. The Route 1 is for existing listed companies, and the Route 2, so it can accommodate new ventures as well. But again, because the requirement is just a bit slightly above what the requirement is for the entry level, you need a strong technical partner who has a minimum of 4 years operating track record, and also it can be a majority shareholder who is also an HNI. But above all, your market cap must be a minimum 500 million and above. And again, it doesn't restrict you from the kind of the size of capital you can raise. Being in the growth board, main board, or premium board, it has no restriction on the size of capital you can raise. I just wanted to clarify that. And your minimum free float is actually 15%, because I mean, if you look at the size from 50 million to 500 million, I mean, it's a huge size. And of course, you are a PLC, and your minimum shareholders should be 51 to get into the standard segment. And this is just on high level of just to show the difference between the alternative security markets and the growth board with two different segments. And the key there is just to show that the growth board has two segments, which differentiate it from the ASM board. The entry level has been streamlined to accommodate a majority of startups, and your continuous obligation also remain the same. And again, the value-added services have been revamped. I'll talk more about that towards the end of the slide. And this just also shows this just high-level summary of the difference between the ASM board and the growth board. The value-added services will be dealt with in the next slide. And this is the ASM board to the left and the growth board to the right. Now, talking about value-added services. You all agree with me that as a startup, most times there are no structures, or as a growing venture, there are no structures. And it's very important that a company have structure. It's very important that a company have corporate governance. And that's where we've engaged as part of our business development and retention effort. We've engaged known names, as I will reveal the names of our strategic partners, to deliver and provide these services. And these services are along these 5 pillars. analyst coverage. Most times you realize that a lot of these companies don't have a sell side cover. Nobody knows about you. Nobody knows what's going on. With this kind of coverage, I mean, you're visible to the global world. You also have investors relation. It's very key. How do you engage your investors? How do you attract investors? And they are providers of these services, and the names I'll reveal in my next slide. Institutional services will also help you put structures in place and processes in place and position you for potential investors. And the corporate assets is very important, that you monitor the activities around your shares, who is buying, who is holding, and so on. And corporate governance is key for any business or venture to succeed. Corporate governance is a key word, must be in your DNA. And these services are also provided by known institutions, as I reveal in the next slide. These are some of the names that provide the different value-added services that I've described in my previous slide. For analyst coverage, investors relation, corporate assets, corporate governance, and for institutional investors. These names, we all know them, they are known in their different field. And also, above providing value-added services, is also very important for the growth board that as you come in, even before you come in, there's a designated advisor. And these are the designated advisor. We've expanded the list compared to what it used to be when we had the SM board. The designated advisor, they're financial advisors that will hold your hand from start to the end. They'll continue to remain with you, advise you, help you meet your post-listing obligations so that you have a seamless transactions at the NSE. And that way you are comfortable because you're just starting, and with time you have, you'll be living the life of a listed company. And with this selected designated advisor, they are there to support you. I believe we'll share this to you all. It's also very important so it doesn't look like we are just talking about growth board. Some of you might be aware there are 3 boards at the NSE. We have the main, have the premium board, we have the growth board. And I know for the fintech ecosystem, there are some that can meet the criteria for the premium board, others can meet the criteria for the growth board. There are no any form of segregation really, is just eligibility criteria that differs. The size of capital you can raise from being listed on the growth board is the same. You can raise any size from the main board and also from the premium board. It doesn't restrict you. What we have done is just to make sure that we accommodate startups, small ventures who are in their growth phase into the growth board, and you can as well migrate to main board if you meet the requirements, and also migrate to premium board if you meet the requirement. And you can start off from the premium board. I try not to call names, but there are some fintech that are very big that can come into premium board as it is if they are listing today. So this is just to show that we have 3 boards and show the different eligibility criteria for the main board, for the premium board, and for the growth board. The premium board, for example, for you to be admitted into the premium board, you need your market cap to be a minimum of 200 billion. There are companies that have over 200 billion and still on the main board. It's the decision you have to make. So the boards are actually all equal. It's just the eligibility criteria that differs. So it's very important that I mentioned that the NSE as an international exchange, we are very particular about timing, time to market. We are customer centric. And so we reviewed our timing to market, especially regarding approval of different applications. And you see that the maximum, if you have a complete deck, your application is complete, the maximum time it will take for you to get approval and get straight to market is 17, and these are 17 working days. If you have a complete deck, you start counting from when you have your complete documentations, not half documentations, because you can submit an application and the application is reviewed and not complete. You shouldn't hold us responsible for 17 days. If you have an intact, complete deck, then you start counting 17 days. And 17 days only relates to initial public offer, which is IPO, and listing by introductions. The orders, the minimum you get is 5 working days for the order transactions, just to let you know that the NSE is very, is a business enabler and customer centric in our thoughts. And this just shows the growth board fee structure. Of course, I've discussed that earlier in my presentation, the entry level and the standard level. The entry level and the initial listing, they had two lines of fees, the initial listing fee and the annual listing fee. The initial listing fee is 250,000, but there's a discount for the first 2 years by 50%. And your annual listing fee is flat fee of 200 for the entry level, because we intend to support you to sustain your business. And for the standard level, and the initial listing fee is 0.1% of the value of your company, and there is a table to determine the annual listing fee, and the maximum you can pay is 4.2 million, and that's for a capital of market capitalization of over 200 billion. The way forward, I think we've shown our contacts there. You can contact Tony, contact myself. I will end the slide here and turn it over to Mohammed. I'm sure the panelists are ready and the viewers are willing to join the conversations around the discussion that we have today. Thank you very all for listening to me. Mohammed, I turn it over to you for the next poll. Thank you.
Thank you very much, Benga Kolawole, for this very detailed presentation. And I must commend you for the very spot on bullet points you used to try to explain most of this. It's good I think we can go back to the slide showing the fees, because that's one key area everyone would like to. So I want you to take that slide again, because I didn't get it very well. So if you just indulge us for 2 minutes, the slide on fees.
Definitely, Mohammed. Thank you. And even as you're talking about this,
sure,
I know your interest is here, and we'll continue the engagement and conversation. So for the fee, like I did mention, there are two entries to the growth board. You have the entry and the standard. The entry, the fee for the entry is 250,000 naira, your initial listing fee. And NSE, it's quite flexible, and they've also given a discount on the application fee for the first 24 months from launch date of the board. The board was launched on, in January 2020, and so 50% discount applies to it. For your annual listing fee, it's just 200,000 flat for the entry. And the standard, the initial listing fee is 0.1% of your market capitalization, and the annual listing fee is based on a table. The maximum you can pay based on that table is 4.2 million. And for you to pay 4.2 million, that's at the high end, is if your market cap is above 200 billion. Beautiful. I don't know if that's clear.
Thank you very much. Because, yeah, 24 months effective from 1st of January this year, right?
Sure.
Okay, thank you.
Thank you.
Okay, to move on quickly, I think we'll take our second poll here before we move on to the speakers. So admin, if you quickly launch the poll. Yes, second poll, what is your preferred funding option? There are 4 options there: bank loan facilities, private equity stroke debt, public equity, IPOs, and then public debt bonds. We'll use 30 seconds for this so we can quickly catch up. Lost some time. Great. Okay. I think we can close the poll now. Okay, very obvious. So 61% voted for private equity stroke debt. We had public equity IPOs, 32%. Quite related, it's just on the structure. So equity alone, So generally everyone wants to use equity to fund. Bank loan was obviously the worst, 12%, and then public debt, 13%. So again, we'll touch on this during the question and answer session on the importance of equity. Without wasting much time, I'll quickly like to introduce the panelists in no particular order. We have Odunayo Eweni, the co-founder and CEO of PiggyVest. We have Elizabeth Echo, lead listing analysis for the Nigerian Stock Exchange. We have Inoluwa Aboyeji, founder and general partner for Future Africa. Wite Odunaye is the CEO for Eagle Global Markets, and Babs Ogunde is the CEO of Kuda Bank. Thank you very much, panelists, for joining us. Without wasting much time, I think we'll kick off. We would handle this session for the first 30 minutes and then throw open Q&A till the end of the event by 1:30. You can typically would take questions from either the chat box or you raise your hands and will be called if we have time. But as much as possible, you can put most of your questions on the chat box. So if I take this, if I quickly take the, so the first question I would like to direct to the stock exchange, particularly, we would like you to shed more light on the main board and the difference between the main board and the growth board, and how we can use the Nigerian Stock Exchange platform to scale financing, particularly for technology. So I think Olumide, yeah, Elizabeth, Olumide, yeah, any of you can take this, or Tony.
So I'll let Olumide go first, and then I'll go.
Okay.
Mohammed, just to clarify, you wanted to know the differences between the main board and the growth board?
Well, in clear sense, I think it's been touched in the presentation, but what we're trying to achieve here is the real advantage. Tech companies grow very quickly. And because of this, there's the transition between startup and matured is very short time frame. So within 2 years, they can be as matured as the main board. So how can they transition in this phase? Because they won't have 5-year audited accounts, but then they're way bigger than the main board. The speed of tech growth is very fast.
So it's important that we shouldn't distinguish the boards on a size metric. It's really more on a stage metric. Premium board and main boards are clearly different. I mean, the premium board is the more stringent.
So I meant the main. Sorry, Olumide, I meant the main board and the growth.
No, I understand
main
that.
Board
I'm just
trying to.
I'm trying to set the context so you understand and distinguish between all the three boards. Without touching too much about it, the premium board and the main board are fairly similar. But from the growth board perspective, it's not necessarily being looked at as a size thing. It's really more around the stage of the company's operation. So for instance, we don't have a profitability test on the growth board, whereas on the main board, you would expect to be profitable for a while. So you can very much be a very, very large institution, rapidly growing, and remain on the growth board. Indeed, that's certainly what we want.
Beautiful. Okay. Beautiful. Thank you very much. I think, BT, I'll move this conversation to you. Can you tell us about how you started your fundraising?
Okay, thank you very much for having me, Mohammed, and it's a pleasure to be here. I'll just use a quick second to commend the stock exchange, Olumide, Tony, and Larry Odufuwa for your excellence in trying to empower startups, SMEs to grow substantially. And the Fintech Association of Nigeria, that we've been members for 2 years, they have been an invaluable source for anyone that's listening in or called into this. Please use their resources because they've been sensational. Mohammed, The question, how have we funded ourselves? Is that the question?
Absolutely, yes.
Okay, so we set up in 2016. June 2016 was when we launched. What we do as a company, we enable our clients take advantage of global markets. What that means is that you can open an account with EGM and you can trade any asset class, any indice, equity, commodity, or cryptocurrencies in real time, meaning you can go long, you can go short. And we're about to introduce where you can actually buy US stock, Chinese stock, and Nigerian stock. So we provide services for all levels of risk, from high-end risk to low-term risk in global and local markets for our clients. So in 2016, when we started out, we started from the point of view where we're going to grow organically. We raised some pre-seed capital from put up all I had, begged the wife for us to raid our savings, and met up with as many friends as possible to put together some capital to start the business. After 2 years of running the business, what we then did, we did have some sort of traction, not a lot, but some sort of traction that validated exactly what it is we were doing. But we had some issues in that our main partners had a very different view on how we should run our business. So at the time, October 2018, I think it was, we bought out our partners in its entirety, and we went down the journey alone, again, organically, and then using all sorts of methods, from borrowing money short-term, 6 months, 12 months at ridiculous interest rates, just to keep going, to ensure that we can show that the business does have legs. And we did that again, and at the moment as we speak, we're in the middle of a 5 million fundraise to increase our capacity to launch over in other countries on the continent, and to improve on our offering. So it has been a very, very exciting journey. That's if I want to say it's sounding very optimistic, but very difficult. One of the things that we found out very early was when we go and we sit down with a number of investors a number of people in Nigeria, and they just did not comprehend our company that has been around for 2.5 years, with the CEOs and the co-founders pretty young, wearing T-shirts and jeans, approaching them, to ask for $2 million at a $20 million valuation. I mean, there was one conversation in particular where I presented, and the gentleman, fantastic gentleman, a great mentor of mine, halfway during the presentation, he picks up the phone and he calls my father because he knows my father. And he mentioned to him that, Wise could do anything, but he's here daydreaming and fantasizing on this product. And it's just a case of, a lack of interest stems from a lack of knowledge. They were not familiar with the opportunities that tech does provide. The journey for us as a company has been very, very interesting, because the product which we provide is a very niche product, and it's enabled us, it's given us a fantastic insight into the Nigerian clientele. What I mean by that is that it would surprise you to understand that somebody that you would not, class as someone that is financially literate would tell you support resistance on gold, oil, silver. He will tell you things that the Federal Reserve is about to do. He will tell you what Tesla has done, Apple, gold, and oil. And these are people that you would have thought would never trade. And we have actively 4 million people that trade these products that we would have thought they would have no idea about. And this is as a result of technology. Now they can go online and find out things and can educate themselves on things that we never thought possible, with no one doing it for them. So the journey has been fantastic. It's been it's been exciting, difficult at times. I mean, it's been great that we've had the Fintech Association of Nigeria to help, and a number of sensational entrepreneurs, innovators, and people who are, we all do have to bear in mind that we're doing all of this within the backdrop of low infrastructure, difficulty in support, but still a number of these sensational entrepreneurs are doing amazing things. So the journey has been interesting, but it has not come without its challenges, and funding has been one of the major ones. So it's fantastic that the exchange is doing this. And there are a number of things that I think we would have to iron out. These are the kind of conversations we have with Tony and with Larry, especially would there be liquidity to support a number of our ambitions. But to date, it has been a very, very interesting story. It has got easier, of course, with people like Babs raising 10 million, Shola, their companies being bought out, and a number of the entrepreneurs here, doing some really exciting things. So things have improved from where we were 2 to 3 years ago. I mean, we are all here now on a Fintech webinar with the Nigerian Stock Exchange because they have taken interest in this new asset class. But it's been fantastic, Mohammed. I'll leave it for the rest of the panel to say it.
Yeah, thank you very much, BJ. Yeah, for that very interesting. Odunayo, I would like to come to you because PiggyVest, we know very well, has been successful also. Very similar to the story of the very quick trajectory we've seen Eagle Global Markets also achieve. And can you tell us how you also went about your various fundraising? I think you've done a number of series of fundraising right now. How much have you raised in total, and how have you been able to go about scaling so fast?
Thank you for having me, everyone. Glad to be here. So PiggyVest has actually only raised one funding round. We raised a seed round in 2018 for about $1.1 million, and it was from a mixture of both local investors and international investors. But I think that the key thing to note there is that the local investors didn't start to invest until we had funding from the international investors. And I thought that was very interesting. And we haven't raised any subsequent rounds because we haven't needed to. I'm pretty sure we'll prepare for a round possibly next year towards the end of the year. As for scale, PiggyVest started in response to an online trend, in response to a trend on Twitter. And we figured out that it was ideal to go back to that source as a site of growth. So a lot of our marketing strategy has been focused on the young people, has been focused on growing organically via social media, and has worked so far. So the thinking behind PiggyVest is to create an alternative system where people can save in disciplined, flexible manners and have access to those funds. Because from our research, as of today, for instance, 105 million Nigerians are living in the WHO's definition of extreme poverty. And from that same research, you go on to note that 80% of Nigerians need to save at least 40% of their monthly income to be able to meet up with their responsibilities, right? And when you look at the existing infrastructure, you realize that there is a gap. That gap is what PiggyVest wanted to fill in 2016 and did. So we've grown largely via word of mouth. We have a very robust in-house referral system where our users are essentially the ambassadors of the product. And that's worked because PiggyVest now has about 2 million people who regularly use the platform, and the asset base is growing day to day. We also focus on educating young people. Our market is really early, 18 to 34. And these are people who are just coming out of university, new to their careers, new to figuring out what financial freedom looks like, what a healthy financial life looks like. And we target very basic financial education. Here is how you can budget. Here is how you can save day to day. Here is how you can save year on year. Here's how you can save towards the target. So I think the overarching strategy, I would say, is keeping it simple and keeping it very friendly, zero complex words, educating them and meeting them exactly at the point of those needs.
Beautiful. Thank you very much. Babs, your business clearly needs a lot of money. You constantly need money. How are you looking to resolve this? Because I mean, how are you looking to manage this? Because you're technically a bank.
Yeah, hi everybody. Thanks for having me. Really appreciate
the robustness of your demands is not just equity. So I mean, again, the stock exchange provides platform for debt raising. So how are you looking at using most of these fundraising opportunities available?
Okay, can you actually hear me?
Yes, we can hear you.
You can hear me. Okay, cool. Yeah, so thanks for having me. It's a pleasure to be here amongst very talented individuals, both on the startup side and on the stock exchange side, and and just generally people doing like really good stuff. So Kuda is, yeah, you've touched on it. We're a full service bank, essentially. We operate using a microfinance banking license. And obviously that comes with its own challenges in terms of sort of regulatory, working under certain regulatory conditions, which of course leads to needing certain financial resources to meet up with those regulations. So it's kind of like an added thing that we have to sort of consider and factor. I'll talk about how we plan to kind of sustain the business, in a bit. But in terms of how are we, sort of that question about how we got access to funding and whatnot. I don't necessarily think there's like I don't necessarily think there's a science to it, or there's a way that kind of works for everybody. It's literally what I've discovered is it's literally like a personal journey that you kind of discover and you learn new things as you go along. Just like most other people that start a business, it was friends and family. My first check was from a friend that we were at school together. Kind of believed in this kind of crazy idea of building a bank from scratch. He said it never worked, but he believed in me, so he gave me the money. And that's kind of how we started. And then we've gone on to kind of just try to talk to angels and whatnot. And we did, just like Odu mentioned, she talked about, Nigerian investors kind of not, and Bite also touched on it, not seeing the opportunity and viability of a technology-driven business. There probably isn't anybody that I didn't speak to in Nigeria about raising. I literally spoke to everybody. And by the way, they're all calling me now, after the announcement. So, that kind of feels good. But, it was almost like a groveling mission, and that's kind of why, we went outside. We really wanted this to be sort of homegrown, in terms of even the talent that we have that built the company are all homegrown. So the talent is available to a large extent, but the finances, whilst we can see it, it just wasn't forthcoming to us. So it was more a case of no option. We went out and then we started talking to people who, and even in terms of the reception that you receive, because startups it's a really difficult thing to do. Just the reception alone, even if it was a no, really spurred you on. It really kind of pumped you that, okay, you know what, I'm actually on the right track. And so a lot of it, I think it's because, people actually appreciate, a technology business as a very viable concept and sort of value creating asset class. So even if it wasn't for them at that point, you're on the right track, keep going. And that does mean a lot. So we eventually got, a round of angels together. Again, it was kind of like friends, and introductions before we sort of felt comfortable enough to raise venture capital money. And you kind of have to be ready to a certain degree in terms of certain metrics, just certain structures that you've kind of put in place. And that's how we've sort of done it. It's been a long journey, but super, super interesting. And I'm sure if I was to do it again, it would probably be a lot easier just because, the knowledge is there. And one thing that I think that is happening now, and I hope that, it really comes to sort of into play, is that, local investors investors, because there's no doubt that the capital is available, that local investors actually see tech-driven businesses as, a viable asset class, and kind of success begets success. If you ask a Nigerian to invest in real estate, it will do it, in a heartbeat. But if you ask them to invest in a tech business, it's a lot of question. And sort of success stories, he's here, he's done some great stuff, Piggyvest, all of these things should convince, local investors to deploy capital to tech businesses. Of course, to answer your question about sustainability and a profitable business,
okay.
Kuda is not a charity. At the end of the day, we know we have to make money, and we're very mindful of that. The only difference is we've intentionally sort of planned our business model around being able to offer certain free services, and then finding ways to monetize all the sort of what we consider as assets, which are like people, the data they have, the transactions they're doing. Obviously, we're a bank, and the basic things that a bank does is look after somebody's money, that patient money that they don't need right away, and lend it to people that need it immediately, and you get a premium for that, which is called interest. It's actually really super simple, but you have to get sort of the balance right. So what we're working on right now is the other side of banking, and sort of the money-making side of banking is going to come into play, but you can't do one without the other. Otherwise, it's just like super expensive. You're borrowing a lot and it's expensive, or you're just taking money, and it's more challenging to kind of monetize that money that you take if you're not able to do the other side. So that's it's kind of like a long game for us, but we definitely intend to be extremely profitable.
Thank you very much. I think right now I'd like to hear from Inolua, if what everyone has said is similar to your story, and how much of your fundraising, your startup fundraising, did you get from local versus foreign participation?
Great. Thank you for having me on the panel. I guess, my background is I've been working in the tech space for the last 7 years, and building startups in the technology space. That's my background. And we did Andela, which was pretty much entirely foreign funded. We did Flutterwave, which was primarily foreign funded, but is now starting to tilt towards more and more local ownership. Now I run a business called the Fund for Africa's Future, which is 60% local funded, but has also quite a bit of foreign participation. The reality of foreign funding versus local funding is a function of capital structure, not just a function of willingness or lack of education, because contrary to what most people may realize, quite a bit of the supposed global funding is actually coming from local investors. But the problem is, unfortunately, the markets are not structured to provide the level of regulatory certainty, as well as, a reasonable structure for encouraging people to domicile. And there are a number of levels to that problem. One level of that problem is, how do you unlock institutional capital locally? Because as Odun said in our example, investors wanted to see the global institutionals invest before the locals decided to invest. So that gives you some sense of what the challenges are from a stamp of authority perspective. And I think, the reason why we often miss our way in this conversation is the tendency locally is to think about it as just a money problem. So I'm just going to throw money at you and walk away. but it's an expertise problem when you're talking about technology. You really want the right kind of money involved, not just anybody. And a lot of those investors are not local. However, they're willing to work with local investors because there are things that even the most technical international investor cannot do. However, are we making an active effort to reform our capital structure and make it make sense for investors and for investment managers like myself? The truth is no. You know, if you look at our venture capital laws, they're in dire need of reform. You can't tell me to put down a percentage of money that is committed as a fee. Do you understand? Because that's just not how the world works in venture capital. And it's not clear that the regulator understands that. And there's education that has to be done so the regulator understands that. There are other challenges, for example, some of which have now been resolved. Local capital going into this stuff. Consumers are saying they want to put 31% of their assets in alternative investments. The banks were, prior to this BOFIA that was just signed by Mr. President, were not allowed to invest in venture capital. Meanwhile, if you look at, for example, some of my biggest LPs, the biggest LPs, they are banks, Bank of America, BMO, you know. So why, if they have access to local capital from banks in their jurisdictions, why not here? There's also the pension fund battle to fight, because when I'm going to those guys abroad, they're getting their money from pension funds, endowment funds, and banks. Meanwhile, here I'm limited to high earners, but not rich yet investors, and so on and so forth, who need the validation of institutional investors abroad in order to do it. So there's a lot of challenges with the capital structure. And I think, you know, you can do all these like, yeah, petty, oh, come here, you're a small boy, this. I mean, last year, $369 million came into the technology space from outside the country. And those transactions would never smell NSE because the capital structure is faulty. So I think for me, I mean, in our own firm, our companies have raised about $300 million in follow-on capital, right? Personally, the companies I've been part of have raised $180 million in follow-on capital. A lot of that capital can come to Nigeria and the NSE, but there has to be a serious conversation that includes us with the regulator to say, guys, the world has moved on from the way you thought stock markets will run in 1990. Let's have a conversation about what's new and how we can work together to make it happen. So that's my own contribution.
Thank you very much, Inyola. The truth is, every stock market today, to a large extent, especially the developed markets, are driven by technology companies. Most of that growth has been fueled by technology. Today, the US stock market looks like it's up, but if you discount the appreciation in technology stocks, you'll find out that the market is actually down. So it's very similar trend across all markets. The Nigerian Stock Exchange clearly needs technology companies. It's extremely important we have technology companies. So what you tend to see is the more tech companies you have on an exchange, the higher their performance annually. Typically, portfolios I manage, we've tried to take tech positions, but they've been indirect. So buy ETFs in other markets. What, in your view, Inyola, do you think would entice the fintech community to raise capital on the stock exchange?
Like I said, we have to kind of work with the structural issues first and foremost. You know what I mean? I think those are going to be the most important things. I acknowledge that there's a lot of coordination that has to be done. But like I've said many times, you know, ease of entry and repatriation of capital remains an issue on the stock exchange. And there needs to be a way to engage the special economic zones where that ease is guaranteed, so that it's possible for people to come in and out of the stock exchange, because this is very, very important, even for attracting foreign exchange. Liquidity is key. But more importantly, my sense is that there hasn't been any engagement. There are listed companies in the technology space that are doing well on a numbers basis that one could be persuaded to take over, but no one is facilitating those conversations. People are not comfortable with us in the room. So we're not going to bring we'll take our capital to Delaware, where they're ready to have a conversation, or to Mauritius, where they're ready to have a conversation. We won't bring our capital where our capital is not appreciated. So there has to be a concerted effort to reach out and engage those who are driving the vast majority of the capital importation into the country, and say, okay, I know you're a small boy, you're not 50, but you're bringing in 180 million, $200 million of capital. Let's have a conversation. What would it take for you to bring it to the stock exchange? Then we'll give you a list of demands and we have a negotiation like adults. But if the approach is, oh, we are the ones who control it, keep it small and we'll just stay away, because that's all we can do. We can't do anything else.
Beautiful. Thanks. Bite, can you tell me more on this topic? Because this is a very interesting issue.
Well, I mean, he has a lot of very valid points there. You know, the truth is uncomfortable, it's bitter, but the truth is what the truth is. There are two things. There are two things to this, and I had a very different view when I started EGM. I also wear a little other cap. We also invest in a couple of companies, Kuda Bank being one of our bigger investments, and that's another cap. But these are some truths. Now, I had very upset with our money bags, our financiers, our investment houses, the guys that make the decisions, because they're all very exposed, all studied abroad, they're the best that, so I was very, very confused in the beginning how they did not understand the concept, But with time, I got to understand some other things, and these are things that we've got to be real about. Yes, we see the fantastic things that technology is doing all over the world, but we have to understand that the United States, Britain, Asia is very different from Nigeria. How many tiled roads do we have? Right? We've got to be honest about some certain things. Most of these men, women who have a mass amount of capital in Nigeria that we go and sit down to ask for capital, the reality is they made their money doing all sorts of different things. What we are telling them is alien to them. So it's up to us to also enlighten them, educate them, because they're our partners in this. They're not our enemies, they're our partners. They just don't understand. They don't understand how a 30-year-old, two 30-year-olds that maybe didn't finish university will take 5 million from you and turn it into 20 million in 5 years. They don't understand it. So it's our job to enlighten and educate. And the beginning is always very difficult. But once we start having, great results like what Flutterwave, Andela, and Paystack and Kuda, what they're doing, it now lets them sit up, right? It makes everybody sit up and everybody pay attention. Because the first thing that what I found with most of the big money bags is better the devil they know. So yes, they could make 10, 15 times on an investment opportunity, on an exciting fintech opportunity, but they don't understand the concept. They don't understand how it will make money. So they will stick to their property, or they will stick to whatever it is they've done that has served them well and has given them, 1-2 return. So it is very, very frustrating for the innovators and for the money men like Ian, because the reality is the capital is there. Okay, if you don't want to work with us, then please move out of the way so we can do our thing. But still, there are a number of stumbling blocks that are put in the way. But I've come to realize now that they are not our enemies. We just have a lot to do to enlighten, to educate. Because if we think about this, Mohammed, most of the big investment companies and investment banks in Nigeria are still raising money for infrastructure, and they're still having difficulties. We can see the infrastructure in our country. It's very difficult. So if we're going to be very honest and have a serious conversation about this, it takes a lot of education on both sides, both on the investor side and on the innovators. Us that we want all these amazing things to happen, but we tend to sometimes get carried away and ignore the terrain which we operate in. Now, with this very difficult terrain which we all operate in, Andela came out of this terrain. PiggyVest has come out of this terrain. Kuda, Stripe, and a number of exciting opportunities. So these founders and investors and money bags have found a way to work the terrain and still succeed, right? And I think the first group of people that have done that has made it easier for those that would follow, because now the conversation will be very, very different with the money men. But I will leave on this. If the stock exchange really wants to attract the best companies in Africa, in Nigeria, and possibly the world, then there are a number of things both SEC, Stock Exchange, and CBN has to do to change things. The game has changed. It's changed completely, just as Ian said. You've mentioned today. I mean, I don't know what the Nasdaq is doing today, but when 4 stocks on that Nasdaq move, the Nasdaq moves, meaning that technology is playing an amazing part in all economies, and it's going to be the case going forward. So, and the truth is, and this is I suppose this is, let me put it, very blunt, very direct. Now, a number of these companies are doing amazing things. If we do not step up, the exchange and a number of other people to come and take advantage and mind themselves, we're going to wake up in 10 years or 15 years from today, and the best and the most sophisticated companies on the African continent are all going to be owned by foreigners. Every time interest is made or profits are made, those profits are going to be taken away. And that would not be a mistake. It would not be, at the time, I would defend anybody, any founder that is spoken down to make it look as if the person is a sellout, because they were there in their time of need, when things were difficult, seeking capital, and they were ignored. So you do what you know how to do best. You go out and you seek capital. So for us to really, for the development as the continent, for the country as a whole, it's very, very important that we really sit down and have these conversations in detail. In terms of how financing and global economies work, especially with the pandemic, there has been a general reset. And if we decide to continue on the ways which we've continued in the past, we have just seen Stripe acquired Paystack. There will be more and more and more and more of that. So I think it's time that we all begin to have honest, serious conversations where we enlighten each other on the possibilities of tech, and at the same time understand how our money bags made their capital and their feel on the world to bring them round. And I think together, both parts of the people that have the money and the innovators, I mean, if we begin to work together, bearing in mind that we provide these services in Nigeria or on the continent, right? That if we get the money bags and the guys that hold the keys to these locks to understand what it is we're trying to achieve, rather than them lock away all that capital in empty houses in Europe or in Dubai or in the United States, put that capital to work with innovative founders and watch both the country, the continent, and your capital grow. Thank you.
Excellent. Thank you very much, BJ, for your very passionate plea. I would want the Nigerian Stock Exchange to react to this, because I know very well that there are ways we could ensure there is a balance. One key thing Inioluwa pointed out, it's the liquidity issue. No one wants a market, especially if you try to raise money and you're not able to get it, or the stocks do not trade. But I know very well that the stock exchange has a dual listing platform whereby you can list in multiple markets. You're automatically solving the capital importation problem by doing that, and ensuring that those who want to buy or invest in your company in Naira are investing in Nigeria, and those who want to trade your investments in other markets, whether it's the London Stock Exchange or the New York Stock Exchange, it's very possible. So I'd like Elizabeth or Lumide to shed more light on this dual listing opportunity and how we can take advantage of it to raise capital.
Thank you, Mohammed. I will just start by saying that for dual listed companies, we are looking at cross-border listings, and cross-border listings will refer to foreign companies who are not incorporated in Nigeria or who are incorporated in Nigeria but would like to raise foreign capital, or who are incorporated outside Nigeria but would like to raise capital in Nigeria as well. So you can go both ways. So for example, Seplat is a Nigerian incorporated company but raised capital in Nigeria and is listed on the Nigerian Stock Exchange and also listed on the London Stock Exchange. And then we have Airtel Africa. Airtel Africa is a UK incorporated company that is listed on the London Stock Exchange, but also listed on the Nigerian Stock Exchange. So it raises capital both in London and also in Nigeria. So we've had success stories like this on the Nigerian Stock Exchange where companies can take advantage of this dual listings mechanism to raise capital both in Nigeria and abroad. And some of the things we always look at is when you are looking to raise such capital, or you are looking to do a cross-border listings, then we have to look at the other jurisdiction in which you're also being listed or which you're going to raise capital from. So for instance, you can be primarily listed in Nigeria or primarily listed in the foreign jurisdiction. If you're primarily listed in the foreign jurisdiction and you also want to raise capital in Nigeria, so you want to also list on the Nigerian Stock Exchange, one of the things we look at the jurisdiction in which you're primarily listed to be sure that it has the same standards of shareholders protection and disclosure requirements that will also be good for the Nigerian investors. So we are looking at a jurisdiction that is also a member of the World Federation of Exchanges, or a jurisdiction that is an IOSCO member, because then we know that you are operating either at a higher level or at least at minimum on the same level of protection that we are operating in. And then you can come into the market. And if you are listed in a primary jurisdiction, you want to do a secondary listing in Nigeria, then we can rely on all the documentation requirements that you have already submitted in your primary listing venue. So you don't have to do double work in that sense. We'll just rely on that and receive those same documentations, those same level of approvals, and go through our process. And it becomes a seamless process for you to raise capital both abroad and in Nigeria as well. And if it's the other way around, then the jurisdictions can decide to also rely on the standards of protection or the documentation that you have provided in Nigeria and maybe ask you for some additional layer of documentation for you to meet those requirements, depending on what they want. So we have MOUs with stock exchanges like London Stock Exchange. We also have an MOU with the Luxembourg Stock Exchange. So if you want to raise green finance or other forms of financing, we have all those MOUs in place, which helps you to list on both a foreign market and also a Nigerian market. So that's what's available for cross-listed or dual-listed companies in Nigeria on the Nigerian Stock Exchange.
Thanks, Elizabeth. Yeah, thanks, Elizabeth. This is very interesting, very important, so that we know that you can actually go via the Nigerian Stock Exchange and actually access foreign capital without necessarily jeopardizing those investors taking Naira risk, but then you get your capital. I think that's very important. Odunayo, I know you say you raised most of your money, $1.1 million. What kind of incentives do you think the stock exchange or government to a large extent, or SEC, like Bita said, and Yolua, to encourage, what would encourage you to consider, what incentives would you like that would encourage you to consider using the Nigerian Stock Exchange to raise capital? List them in any form you like, within that generational. I think you mentioned an age band between 16 and 20. Yeah, they like a lot of incentives.
I think that Ian did already mention most of them. I think that the existing frameworks around listing need to be further adjusted to accommodate fintech companies. And then there's a lot of opacity, I think, about people, actual individuals, investing via the stock exchange. There's an educational gap that I think currently exists between Nigerians and the stock exchange, as it were. There's incredibly efficient stock apps right now. And I don't think I can think of a single one that attacks the Nigerian Stock Exchange as a way to encourage people to invest. So there is the fixing of the educational gap for Nigerians, for young people to know that this is actually a worth it investment opportunity. That hasn't been sufficiently done, that needs to be sufficiently done. And the second thing, on the side of the fintech companies, I think that the frameworks need to be adjusted. There needs to be specific concessions made to fintech companies to encourage them to actually consider listing here and then bring the wealth of users that they already have, right? Between PiggyVest, Kuda, Vite and in his former companies, you have almost all Nigerian youth. And that is a block of people that's still very much in their prime. They have a ways to go with building wealth. They're not like at the peak of their wealth yet. So there's a lot of funds there that we don't want repatriated abroad. And if we don't want them repatriated abroad, if we want them used and utilized within the Nigerian market, those concessions have to be made. That block of people have to be listened to, right? How they like to spend, their habits, their use of technology. All of this has to be incorporated into like the existing frameworks and the existing regulation to make sure that people actually see it as an attractive destination, both for listing and for investing.
Beautiful. Thank you. Thank you very much. I think the stock exchange is clearly taking notes, and as much as possible, because as we put all this together, it's going to materially ensure that we create the right platform to encourage blowing up listing of fintech companies on the stock exchange. Babs, clearly the NSE right now provides, well, when you list on an exchange, particularly the Nigerian Stock Exchange, it provides a number of benefits and opportunities, from brand visibility to efficient price discovery for your company, to liquidity, but more importantly, also it improves corporate governance. We've seen a lot of issues. I'm sure you know of the Health Plus. It's not tech though, but yeah, the recent Health Plus issue. If the stock exchange can provide this platform to ensure stability or coordination between all investors, why do you think fintech companies are not taking advantage of this? Typically, you want to sign, you go through your typical due diligence phase, sign agreements, you do due diligence, you appoint lawyers, and before you know it, there's an issue. The stock exchange already provides a very strong platform to reduce this kind of issues. How do you, the question is, why would you not consider using the stock exchange? Even though there are disadvantages, no, but then the advantages outweigh the disadvantages.
Okay. I mean, look, I think there are a number of ways to answer that question, and there are a number of reasons why, you know, that's not the case in terms of why sort of fintechs are not going to the stock exchange. But for me, I think the first thing is, you know, is the stock exchange, you talked about visibility, is the stock exchange visible to fintechs? Do founders understand that these things exist? You know, how much marketing is the stock exchange doing to attract sort of the right companies when you talk about fintechs? So there's a visibility problem. There's an understanding sort of problem in terms of what is the real vision of the stock exchange in relationship to sort of fintechs. This is, for me, I mean, this is the first sort of interaction I'm having with the Nigerian Stock Exchange. And I think generally also, like historically, and it's not just in Nigeria, the stock exchange is generally viewed as, you know, an exchange that actually attracts very established, very organized companies, you know, that have gone through several life cycles, and they're able to sort of cater for the rigors of what the exchange expects. And you know, and the reality is, you know, a lot of times, you know, new companies, startups are not gonna be as efficient. They're not gonna be sort of, they're still finding their feet. You're still trying to even find product market fit. You know, all of these things we're talking about cost money. You know, it costs money to be organized. It costs money to get a financial controller that can sit across the table and speak to somebody at the exchange. It costs money to get a compliance officer that is sort of, you know, that has the courage to be able to, you know, meet the CBN or whoever, you know, in a meeting. So the reality is, and this is again part of the reason why, you know, fintechs will gravitate towards, and he kind of mentioned it, sort of investors with not just with money, but that actually understand not just the business, but also understands the founders as people. You know, they get it. And if you look at it, founders typically are quite young. You know, a lot of these things are not necessarily, it's not at the forefront of what they're thinking about, you know. So when you have an investor that, you know, comes across as, you know, yeah, I know everything is not perfect yet, but, you know, I'm here to help you. I know you need funding to get over the line. You can use my, you know, my resources, you know. So it's a natural, I mean, even if you offer that to anybody, they will naturally gravitate towards, you know, the one that seems to understand them. And this thing is really, again, about relationships, you know. A lot of it is about relationships, you know. Again, I go back to E's statements about sort of, you know, taking people seriously, you know. It's not an age thing. It's not a, you know, look, if you have the capacity, if you can do it, then they need to be taken seriously, like really taken seriously, not kind of lip service. Let's do this because it's nice and it looks sort of good in the press or whatever, but, you know, actually being taken seriously. And I'm convinced that if we fix that sincerity in relationship, everything else follows, because, you know, we don't have to keep telling you that, hey, you need to make allowances. You need to make, you know, if you're sincere about trying to help, you will see that you need to make allowances. You know, you will see that, yeah, you know, look, these guys are not going to meet these challenges. I mean, I was just taking notes on the growth board. You know, I think it's a great initiative, to be honest. And I do think, you know, obviously it's work in progress. You know, it looks like work in progress. Some of the points that were made about, you know, things like, you know, we're already talking about majority shareholder to, you know, at the beginning. I mean, what is that? Then you're not a founder, you know, like right at the beginning, you have to have a majority shareholder that is, that's going back to the sort of old way of, you know, I have the money, so I give you, then it's my company. You know, nobody wants to give majority stake at this stage. You have to understand and appreciate that. You talk about, you know, things like, you know, core investor must, you know, you're kind of defining things, you know, and already in the spirit of trying to be sort of appealing, you're actually still being it's just a different generational gap, you know. So as he mentioned, if you actually have sort of representation, you know, people, you got to remove, if you know, like just like us at Kuda, we're building for people of a certain age. Most of our team members are in their 20s, you know, because these are the people that understand, you know, what you're building, what you're trying to serve, the service you're trying to provide. I think Piggyverse has been ridiculously successful because the founders are essentially the users, you know, so you get it, you understand it, you know, so you have to almost take the same mindset. If you're trying to attract a certain crop, you know, you have to have people from that crop that are designing, you know, the solutions you're trying to provide. Otherwise, it's going to fall flat. It's not going to work. So I think, you know, to kind of just, you know, close on your question, it's about who makes it work for me, you know, and that's the long and short of it. When you look at the ease of the funding, the understanding of, you know, my plight and my issues, the sincerity, the way you speak to me. I mean, yesterday, I mean, and this is kind of like sidetrack, almost like a joke. We almost had a dress code conversation for this Zoom meeting. You know, like, oh, it's almost a turn off, you know. So if you, it can't be understanding needs to be sort of formal and, you know, so if we want to change it, we need to really understand. And I think we will have a lot of success. I think this is a good, sort of foot forward, to let's engage, let's talk, let's know what the issues are. And then we can begin to, take steps to provide those necessary solutions.
Thank you very much, Babs, for again, another passionate, very passionate and straight to the point appeal to the exchange. Again, the whole aim of this is to ensure that we get feedback, the stock exchange gets feedback, because we want to ensure that this works. We need to create the right platform. I completely agree that there's been some huge time lag. Things are changing. And as much as possible, the whole aim of the growth board is to start to fix this huge gap. We cannot continue to wait for the main board and the primary board. So the growth board will continue to be tweaked to ensure that it becomes a very, very strong tool for capital formation. I know we're way behind time.
Mohammed, do you mind if I just add? Very, very, very briefly, can I just add? Because I've worked alongside.
Sure, go on.
I've worked alongside with the exchange on the growth board, and I must commend them, the exchange, FMDQ, and everybody that's doing whatever it is they can to ensure that a number of our businesses are not acquired or taken abroad. But just as Bas have said, and a number of people have said here, I suppose it's a slang that are they genuinely ready? Are they sincere as they've mentioned? Because it's a major opportunity for the Nigerian Stock Exchange to be the main one that attracts all these companies on the continent. The major opportunity. Now, a number of the things that they might think are desirable, which I think they are, like the lawyers and the accountants and the financiers, we have to bear in mind that they're incubators, they're accelerators, they're all these cohorts that provides fintech companies with seed financing and a number of things that the exchange, or maybe the exchange in partnership with the Fintech Association of Nigeria, could do things. But the competition out there for these fintech companies is immense. And it's got to take a lot more than a sentiment. Yes, I'm sentimental, and I love Nigeria, and I'm a big fan of the exchange. But it's got to take a lot more than sentiment. The numbers have got to make sense. It's got to be in the interest of a company to come and list on the exchange. Why would I list on the exchange rather than stay private? Why would I list on the exchange and take money from the guys on the exchange rather than go abroad and take money from a private equity company or an accelerator that completely understands me and understands my needs? So if, like I said, it's going to be difficult. It's not going to be easy. And it's a major, I'm sure as they're aware, it's a major opportunity for them to take the lead on this. But they've got to come, as they say, come correct. You know what I mean? And we've got to really look at the things that need changing, because we've just said here, these are a number of founders that have gone about doing things in their own way, and they're proving successful. They've found new ways of doing things and it's proving successful. So if the exchange wants to attract that, which I hope they do, and we will do all the things that we can, but it has to make sense. Thank you so much.
Thank you very much, BT. So I'll just quickly take a few of the questions because, like I said, we've run out of time. And then the very first question I'll take here is, which department of the stock exchange will be in charge of the broker to fintech collaboration program? Who is the head of this department? This is to the Nigerian Stock Exchange rep, Elizabeth.
So I'll leave Olumide to respond to that question, or Tony to respond to that question.
Okay, good afternoon, everyone.
Thank you.
Tony Bezeko here. Definitely the primary markets team, it's the one driving this initiative. We will be in the forefront of trying to make sure that this dream and this conversation becomes a reality. A lot of points have been made, and we're taking notes, but definitely the primary markets team, and behind the primary markets team, you have a universe of people that will be reaching out and be engaging to make sure that we bring this home and make it a reality. Thank you.
Yeah, thank you, Tony. Another question, why do you find it easier to communicate your equity story and growth plans to foreign investors as opposed to domestic investors? Is it a knowledge gap, and how can domestic investment banks assist to close this gap? So anyone can take that question. Inyorua, you want to take the question?
Yeah, I think it's like I said when I spoke earlier, there's a misconception about investing in high growth companies that it's just about money. And the reality is that it's not, right? Like, it's not just about money. Not just anyone with money can invest in a high growth company. There are actually people whose jobs it is to look at the asset classes and invest, right? And if you don't understand the business, you can't invest in it. So you know, the generalist approach to investing that we typically take in Nigeria, you know, we don't have analysts that have depth and stuff like that, you know, or at least enough of them, right? The same firms analyze everything. You know, those are some of the things that we have to put away to be able to do well. At the end of the day, I think you know, it's an asset allocation problem. By the way, I'm not by any means saying, look, I think a lot of the conversations about investors being educated kind of miss the point. I invest in real estate and oil and gas funds. I don't know crap about those businesses. I just put like what, 5% of my income in them, and they return or they don't return. You know, it is what it is. I think the challenge really is the stock market, is the stock exchange encouraging the right kind of activity, and that's the real question, right? Because then an ecosystem will form around the kind of activity that it decides to encourage. So, you know, for example, you know, the Nigerian Stock Exchange, I think the average age of people on the Nigerian Stock Exchange is a big problem, right? Most of them, you know, are not young people, right? So at the end of the day, young people are going to look at the board of the Nigerian Stock Exchange and be like, yeah, that sounds great. Not really my thing, right? Because I don't see anybody that I admire or can understand or appreciate on the board. So these are the kind of things to fix. I don't think I think a lot is being said about education, but how many investors really understand the assets they're investing in? How many investors really understand how banking assets work? Not many, but they don't have to, because that's the job of analysts and the entire value chain of people whose job it is to understand it and recommend buys or sells.
Fair enough. Good. So, but I think, for that, I think the investment banks, local investment banks, will be able to play a very vital role there.
How many are owned by people under the age of 40? How many? It's a point blank question. There's none, because you put 150 million naira as a barrier to entry for investment banks. I'm an exempt reporting advisor in the US, right? I'm not 30 yet because I don't have to put any money down. I still report, but I'm exempt reporting. I have my CRD number. I'm not registered in Nigeria because it's so difficult and impossible, right? And I'm going to spend way more than I did. I spent maybe $5,000 setting up my exempt reporting status in the US. In Nigeria, I'm probably going to spend something in the order of $300,000. These are the decisions that make the difference, right? So I'm just saying this to say, you know, you've got a stock exchange that's stuck in the early 2000s and isn't making any effort to reach out to people who were born who were born after 2000, you know, and so it can't wonder why, you know, people like Odun aren't telling their people to go invest in the stock markets.
Yeah, thank you very much. I think though that's changing very quickly. Technology, to a large extent, the Nigerian Stock Exchange is embedding technology into most of their processes. From the account opening a few years ago was very cumbersome. It takes almost 24, 48 hours to open an account. Now that whole process is getting extremely efficient. Same thing you get internationally. So I think, yeah, those processes, even though technology is there, if you don't have the right processes, there's a limit to what technology can do for you. So yes, I agree with you, but luckily all that has been resolved now. Let's see, I think this other question is directed to Kuda Bank CEO. I'm really impressed by your services. How do you make money without charging for any banking services? And is your free banking model sustainable?
Yeah, so we took a business.
In 1 minute, if you can take the,
sure.
If you can take that question.
Yeah, we took a business decision to offer, to make banking affordable. That's our business model, make banking affordable. And it doesn't actually get cheaper than free, you know. So we will find other ways to make money, you know. We're going into credit soon. We're going into other sort of avenues to make money. We have an opportunity to play in the remittance market, which is very lucrative. So, you know, you don't necessarily have to charge as a bank to make money. If you strip off all the expensive bits about running a financial institution, which in most cases it's branches for distribution, it becomes expensive and then you have to charge. But if you take all of that out, you can be profitable by doing real banking, which is, you know, banks are described as lenders, you know. So if you're able to lend primarily, you will make money. So yeah, long and short.
Good. Okay, one last question here is the exit route for most core investors and private equity is the stock exchange. So there's no way you can escape from this as your exit route. What's your reaction to that? Again,
so, did you say, what did you say? You said the
as you start to attract core investors and strategic investors in your journey, you still have to come to the stock exchange as one of the ways to as one of the ways for your strategic investors to get cash. How would you be able to avoid the stock exchange? I think that's the question, if I got it right.
I think Paystack just exited.
Yeah, but
well, I'll say this, Mohammed.
I mean, the timing of that question's a bit, you know.
Yeah.
Mohammed.
Loads. Second exit. So, the exchange is no longer the route of exit anymore. You know, there are loads of ways you can exit without using an exit.
So I think you should throw more light on that. So stock exchange is one. So I think for Paystack, it was an indirect exit because ultimately it's an exit because the parent company is looking to list, I guess. So it's about value. Again, Paystack decided not to list there, but some listing eventually would happen.
No, Mohammed, the question is not whether listing will happen or not, right? There's no question. At some scale, you would list. And many of the companies are foundational, so they would list at some point. But the question is, there are many routes to listing. So for example, on the AIM, I can list. It's actually very doable. Many companies are actually at that level where they can list on the AIM. And then maybe they'll come and then double list, as was suggested earlier by Elizabeth, on the Nigerian Stock Exchange, right? And you know, there are other routes, right? There's secondaries, there's much larger PE funds that are looking at companies. I mean, InterSwitch technically was an exit, but there was nothing on the stock exchange. And that's probably one of the biggest technology success stories this country has ever produced. So I think it's important for the stock exchange to understand that it's competing with other exit options. And not to have the arrogance of believing that people won't exit except they went through the stock exchange. They can be ignored. I think that's what they need to realize. They can just be ignored.
A classic example is Ant. It took them how many years before they decided to try to come and list, right? They raised money all the way. That's China, Ant Group China. So yeah, I agree with you. So there are multiple ways to do this, no doubt. I think there are no other questions from what I can see. And We'll
I
try.
think there's just one final question. Forgive me, everyone, but I think I should answer it. I saw it. I know it's a marketing question, but
Okay.
I'll answer it all the same. So the question is
So let's take that last question and then we can close.
Okay. No, I'm reading off. I saw someone ask me a question. It's a marketing one, but I'll answer it all the same. So the question was so we're currently working on our US stock, Nigerian stock, and US stock, Nigerian stock, and Chinese stock, and we expect that to be ready towards the second week in January for our customers that want to trade US, Nigerian, and Chinese. Thank you. I'm sorry for that little plug. Back to you, Mohammed.
Thank you very much, BT.
Mohammed, if I may just take 1 minute to address certain things. So I really appreciate the passion and the dialogue. It's been very, very useful and very, very, I guess, insightful from the Nigerian Stock Exchange's perspective. But it's important that I sort of contextualize a lot of things. So for instance, we are a marketplace. The exchange is a marketplace. We essentially facilitate capital formation and liquidity where possible. And historically, there were more quote unquote traditional businesses that we served. And when access to foreign exchange from a capital perspective became an issue, we solved that problem through a dual listing arrangement with the London Stock Exchange and then subsequently with the Luxembourg Stock Exchange. When we started realizing that there are opportunities in the tech ecosystem, beyond fintech, by the way, but the tech ecosystem at large, we engaged the Fintech Association and then came up with broad guidelines, which became what was the growth board. So it's not as though the exchange created rules without levels of engagement. But the truth is, it's a relationship and it needs to be a partnership. And that dialogue on both sides is very, very important. And I think that there's a key point that perhaps hasn't been touched on sufficiently here. The truth is, we're still a country of laws. And in as much as the exchange may want to change certain rules, there's a legal framework that those rules are based on, and which then speaks to advocacy. And we spend a lot of time on advocacy. So some of the rules, some of the laws that have changed in the previous finance bill and the proposed finance bill and the BOFIA Act that you spoke of, and a number of other things are the areas that we spend a lot of time. So and BTech can speak to this. We've also engaged a number of tech companies to pitch the solution as we have it. But it's never going to be a perfect solution. It's certainly not going to be a one-time solution. It will be an iterative process. But what I think there's a significant opportunity is the dialogue needs to be both ways. The dialogue can't be just the exchange reaching out to tech providers to say, you know what, come use our platform. We really also want to hear back. If there's specific issues, then it's important that we take on those issues, that we contextualize it, and then we'll escalate it. We do have access as the exchange to certain lawmakers and other regulators. And if there are particular pain points, then we certainly want to address that. That's currently what we do for our companies that work with us. There are sectoral issues that perhaps through policy or regulations that haven't been supported for business in those sectors. And it's easier for those companies to come under the umbrella of the Nigerian Stock Exchange, where we then have an engagement. Airtel Africa is a transaction that happened largely in part by just our own involvement. I mean, this was a company that had every intention to list in Johannesburg. So it is not as though laws or rules are being written. There's a lot of useful information that's come out of this session. Indeed, this event is yet another example of us trying to engage so that we can better understand where the issues are, and then we can modify things. We've come up with a growth board that we launched earlier this year. There are a few companies that are looking to use it. Does it solve all the problems? Certainly not. And I touched on something very lightly in my opening remarks, that there are other solutions that we're building, because we recognize that whilst the growth board may solve problems for a certain kind of company, it also doesn't work for other kinds of companies, and therefore we're creating a solution for that. But it doesn't stop there. There are many different other asset classes we can consider. There's short-term debt opportunities, long-term debt opportunities, but we don't create a marketplace for ourselves. Indeed, we create a marketplace for issuers and investors. And it's important that we get the dialogue going as much as possible so that the things that can be tweaked, we certainly will look into tweaking. I just wanted to throw that in.
Mohammed, if I may, just 1 second. I've been listening and I'm really very impressed.
Thank you, sir.
What is coming up from this discussion? I think the Nigerian Stock Exchange has done very well. If you compare the Nigerian Stock Exchange 2-3 years ago in terms of days and now, they've moved a lot. And it's a journey. And what we expect to see is bridging the gap between innovators, the technology and the stock exchange. And I'm sure in the next 5 years or so, we will be happy at what we'll be seeing. If you look at the most valuable companies in the world today, 5 of them are in technology. The top 5 are in technology. I see that also happening in Nigeria, in the future. If you compare to what happened 10 years ago, those mobiles of this one and so on. But today is technology. So we in the technology area, the innovators, the young guys and so on, need to provide a lot of information to the stock exchange, engage with them as much as possible, and can continue to improve and become a valuable source of resolving some of the challenges that we have seen in the fintech space. So thank you very much.
Thank you very much, Dr. Aino. Yeah, I like that recap. So first of all, thank you very much, everyone. Just like I'll piggyback off what Dr. Aino has just said. We look forward to, welcoming from Flutterwave to Eagle Global Markets to CUDA to the stock exchange in the next 5 years or nearer, because we would continue to dialogue and ensure that this engagement continues. I would want to quickly take the very last poll for today, and then we'll take the closing remarks and close. If you can put up the poll, let's quickly do that, and then. Admin? Okay, if it's not coming up, then. Yeah, quick one. What regulatory actions, in your opinion, would foster accelerated growth in the Nigerian fintech ecosystem? 30 seconds, so we can round up. And thank you for your patience so far. Creation of a robust interface. 30 seconds. So we'll close in another 5 seconds. Okay, thank you. I think you can close the poll. Beautiful. I think, clearly from what I can see here, creation of a robust interface with all regulators for fintech to help fast track product approval processes, streamlining the licensing procedures. It's about 55%. So that's a real big issue. And then adoption of cashless policy was just 13%. Okay. I think we've come to the end of this, and I would like to call Tony Ibeziako of the Nigerian Stock Exchange, who heads the primary markets, to give us the closing remark.
Thank you, Mohammed, for that. I think I have one of the easiest jobs to do, but before I give my closing remarks, I think it will be apt for Ross to share some of the major highlights of today's webinar, and so that we put it in proper context and have tangible items to go away with. I think the president of the Fintech Association, Mr. Aino, in his opening remarks, made very solid statements on where the fintech ecosystem is, and some of the things he highlighted, which obviously manifested itself during the panel discussion, was the need to accelerate and also catalyze the next growth, the growth of the next unicorns or growth companies that are going to obviously adore the landscape of the technology industry. The second very critical highlight, like we've seen in the poll that was just taken, he mentioned the need to provide clarity on regulatory issues and be able to deal with issues with respect to sustainable finance. During the panel discussion, one very passionate highlight was the need for the Nigeria Stock Exchange and all stakeholders, regulatory, the fintech ecosystem, to work in a more collaborative way to make sure that, one, there is proper understanding of that landscape and what the opportunities are, and more importantly, to make sure that the next unicorns that might come into light over the next 5 years are not dominated or being owned by mostly foreign players. One of the major highlights, again, that was alluded to by Eniola, was the issue of what represents capital for the technology company, and that discussion basically it's one that we would want to delve more into to understand and to give clarity on what capital means for the ecosystem, as well as issues around market structure, and more importantly, the ease of doing business, the cost of doing business, and helping local institutional investors understand the opportunities that are very open in the local economy. The last but not the least is the issue of understanding the business concepts, the proof of concepts, the business model, and credibility for that business. And that brought a lot of passion with regards to having a conversation that is not only bilateral, but also—
Tony, if you round up in a minute.
Yes, yeah. But also giving respect to the companies that are doing wonderful things. I think on that note, I just want to thank the panelists. I want to also thank the president of the Fintech Association. I want to thank the moderator. I also want to thank all the participants that has joined for this webinar. This is a journey for us, and we will continue to engage and to make sure that most of the very subtle but direct feedbacks that has been given to us here, we'll take it to the next level and do some good things with it. Thank you very much. Enjoy the rest of your day. Let's continue to keep safe, and we look forward to a more deeper and direct engagement with the ecosystem and everybody present. Thank you.
Thank you very much. Thank you very much. And I think we'll call this a day. The conversations will continue, and we would, as much as possible, share this presentation with everyone and continue to open the channels of communication. Thank you and good afternoon.